Good evening, everybody. Welcome to True Real Estate Investing. We've got a brand new seminar tonight, how investors buy multiple properties. We're going to really delve into how guys go about getting more than one property. I know a lot of people out there have one investment property and they're trying to find out how to get another or multiple properties. Well, we're going to show you ways to do it.
Yeah, not only that, at the end of the presentation, we're actually going to show you 4 ways to buy multiple properties without even qualifying for a mortgage. So there's multiple ways. We were reading the Facebook chat in there, and on the Facebook, someone said, I bet you it's got to do with leverage. Leverage is a key part to it, but there are other ways which we will go over in our presentation tonight.
Our goal is to have all of our investors get at least 3 rental properties. We feel that that's all it takes to get you there. We have clients that want a lot more than 3, but if you can get to 3, then for sure you'll have some security when you retire.
Oh, for sure. We ran the numbers, and with the average increase in appreciation here in Calgary, even at 3.5%. One property at $400,000 will appreciate at 3.5%. I think the growth rate right now, Tim, I don't know what condos right now, it's like 10% right now.
Yeah.
So the market's actually outperforming where we need it to be. But even at a little 3.5% in 25 years time, that property, that $400,000 property should appreciate to $1 million, depending where you buy, of course. But at the end of the day, Tim, what does it take to get started here?
Well, before you get started, the number one thing that we tell all of our clients and investors is that it takes a lot of work. A lot of you have taken investment courses. A lot of you have spent a lot of money on investment courses. Some people will think it's a get-rich-quick scheme, this real estate investing. We're here to tell you it's not a get-rich-quick scheme. As we like to say, it's time in the market, or sorry, not timing the market, it's time in the market. The longer you're in the market, the more money you stand to make.
Yeah, we always say real estate, it's not an event, it's a process. So you have to understand that it takes
cliches today.
Yeah. It takes time. And we're the first ones to tell you that. I mean, the other investment groups out there, Tim, you just said it before, what we do and who we are. There's no BS with what we're telling people, but we are trying to get people there. And if you want to get there faster, we can definitely do that, but it does take work, it takes planning, and it takes a lot of understanding what your game plan is.
Yeah, the number one thing you got to do is take stock of where you are. Basically what that means is you got to find out where your down payment's going to come from. If you need a partner to help you qualify, do you have any money in lines of credit? Do you have lines of credit? Do you have any equity in any real estate right now? How much can you qualify for? And have you met with a qualified investment specialist like Danielle?
Yeah, it's all about working out where you're at. I mean, we've got people coming into our office sometimes. They're not working right now and they want to own 5, 6 properties. And we've had to tell them, look, you have to go back to your day job. I know you don't like it right now, but go back, earn some income so you can get a mortgage if that's what it takes, right? And so we've had other people to come in here where it's totally opposite. They're earning too much money and they could afford an $800,000 home. And we've had to tell them, no, don't go do that, because then that will ruin or take up most of your cash to buy multiple properties. So we've actually had to delay gratification, buy them, say, a condo or a townhouse or a half duplex, and then move them up into the next property and then move them up again. So sometimes you want to take stock of where you're at and then really take stock of how much cash is available and how much you can get financing for. And then we can work out, and Tim, part of that is working out how good is the credit, what can you borrow, have you paid your taxes if you're self-employed, things like that is taking stock of where you're at.
Yeah, so the second step in the process is educating yourself. We want you to become the expert. We want you to have the knowledge as a real estate investor so that you can take that next step and buy multiple properties. So what we generally do is we tell you, read as many investment books as you can. If you look at both of our offices at home, we've got shelves full of investment books from Rich Dad, Poor Dad, from about all different subjects. We've got flipping books, we've got wholesaling books. So we've, over the years, educated ourselves in all of these different strategies, and that's what we suggest that other people do. Right now, maybe people aren't into books, but there's all kinds of real estate investment blogs. There's YouTube channels, there's podcasts. So however you choose to ingest this material, whether it's by reading or by watching, by all means, get as much information as you can.
Yeah, and you know what? You've taken the first step by being on the call tonight. That's learning, right? It's free, and it can get you excited on taking the next step to meet in person and move forward. And that's what it really takes, Tim, to actually start the process or your investment journey.
Yeah, and that's basically being on this call. You're hanging around like-minded people. Most of the people on this call are already investors, or they want to be investors. They have interest in investing in real estate. And, you know, whether you can join other groups, hang around other people, go to meetings, like I said, podcasts, anywhere you can get that information and hang around like-minded people, it's going to help you move ahead investing in real estate.
For sure.
So the third step is develop a real estate investment plan. Danielle briefly talked about how she put that client on an investment plan to move ahead to get his fourth property, sorry. That's what we suggest that you do, is talk to somebody and somebody who will help you put together an investment plan. Now, Azad and I are doing it every day for clients where, you know, we'll have them go meet with Danielle. She'll figure out the financing piece of the plan. And then what we do is we figure out the strategy that they want to do. And we put them on, you know, the path to get however many properties.
Yeah. Danielle, you were talking about Graham. He bought in December just last year, so it's only been five and a bit months because it was just before Christmas. He bought a condo that we knew was going to go up. He bought it for $190, and he just refinanced it 5 months later. Okay, so you guys might be sitting there thinking, is this possible? Can I really make money from this? He just refinanced last week and closed on his fourth property at $270,000. So he made $80,000. $80,000 to put 20% down on his next investment property, which is only going to go up as well because we met the contractors there yesterday, and he's going to do renovations to that one as well. So it's all about using that equity, which we're going to get into, Tim, I suppose.
Yes.
But it's all about creating value, adding value, and having that vision of what you want to do and how you're going to utilize that money for future deposits.
Yeah. So you've educated yourself, you have a plan. The next step in the process is to take action. Now we're going to get into some of these titles or these subjects here. We're going to get more into depth on how you can do it and use them to get multiple properties. But when you're starting investing, you know, you got to take action. You got to pick a strategy that you want to use, whether it's house hacking, Airbnb arbitrage, wholesaling, rent-to-own agreements, whether it's buy and hold. Pick the strategy that you want to do and take action.
Yeah, and I've seen someone's a wholesaler up here. I mean, wholesaling is possible. We're not here to put anything down, but if you have the ability to actually use your own financing and you have a deposit, it is the best way to move forward. I mean, if you are renting out there right now with current rental rates, they will continue to go up. There's no way but for them to go up because those price points, those rental properties, they're in shortage of there's a short supply of them, and they're getting more costly for our investors to buy. So there's going to be a little crunch here with people renting, and you should be trying to get out of that if you are renting straight away.
Yeah, so we'll talk a little bit about wholesaling, you know, further on in the presentation here. So taking action, like we said, is very, very important. We've had people. A lot of engineer clients will analyze our analysis. So we find that leads to analysis paralysis. They just keep analyzing, and they don't get anything done. It's perfectly okay to analyze a property, but take action. That will get you ahead that much sooner. So the number 5 thing that we're going to talk about is understanding your capacity to raise capital. Now, when we say your capacity to raise capital, it may not be your own. Right? It might not be, like I said, your own capital. It might be someone else's capital.
Yeah. If you've read our book, Fearless Real Estate, we go through step by step on how to raise capital. I mean, we always tell our investors to go to the people they know or go to their family members. And guess what? Be prepared for rejection. Like, I'm going to be honest, but you've got so many positive news articles out there, and we stress this and we try and post these on our Facebook page. Whenever we see a company moving here or population increase or property prices going up, we put that on our Facebook page just because these are articles that will help you attract JV partners or help you raise funds. And we always tell our investors, go to people that own real estate, because what are you asking them to do? You're asking them to borrow money either to do a joint venture or for them to get a return on, and you're putting that money into real estate. So they're already investors. They've already seen, especially if they've lived here for 20, 30 years, we've read all the numbers on what those houses have been worth since 2000, since 2005, 2010, all the way till today. And it's crazy. We were looking at Willow Park, an original bungalows coming on the market. We're talking green carpet, orange furniture, blue bathtub, and probably a pink stove or something, right? It's coming on the market next week, and it's coming up for $700,000. That is crazy. That's how far, and that house would have been bought for what?
Oh, it would have been on 1969 for $15,000.
Yeah.
And what we're seeing is even 3-4 years ago, that same house was selling for $5 to $550. So the supply crunch that we talked about earlier in the program, you're seeing it, and you have to readjust your capital goals, how much capital you're going to raise, to reflect what prices are. I couldn't imagine how investors are doing it in Toronto, where if you're buying an investment property in Toronto, the average price is 1.5 million. We're lucky here because the prices are low. And what we're seeing is the rents aren't that much far behind where they are in those expensive areas.
Yeah. And so raising capital, I mean, we do a whole seminar just on raising capital, how to approach people, who to, and how to do it, who to do it to, and then how to make it win-win for everybody. And that's the most important part. But that is one aspect of buying multiple properties for sure.
Yeah, so the next step is you have to set up your mortgage financing the right way. Danielle touched on it in that when you go out and you get a mortgage, whether it's a bank giving you the mortgage or whether Danielle's going through another lender, or even if you're doing hard money lending, third-party lending, things like that, you have to set it up the right way. And then what do we mean by setting it up the right way? I mean, setting it up so that you can get another mortgage in the future. Mm-hmm. There are some mortgages out there that, you may get a great rate on it. You may have a low payment on it, but the mortgage may be set up in such a way that that's the only one that you can get. Yeah.
I mean, that is crucial to work with investment focused mortgage brokers that understand you want to own multiple properties and understand the process on how to get them. The banks are tightening up. That is one problem we have for sure, but there are ways around that.
Yeah, and you have to understand things like mortgage rates, the term of the mortgage, the amount of the payment. If you're going to do a flip, you're not going to get it locked into a 5-year fixed rate. You're going to get a floating rate, you're going to get a variable rate mortgage. You're going to get, an open term. You're not going to get a closed 5-year term. Mm-hmm. So you have to understand the terminology of these mortgages so you don't get caught in just say rate chasing. You might get the best rate you can find, but that mortgage may restrict what you're going to do. So make sure that you speak with a very, very qualified mortgage broker like Danielle, and then you can move forward after that. So the number 7 thing you want to do, or you can do to try to get multiple properties, is raising your cash flow. Mm-hmm. If you raise your cash flow, that means you're going to put more money in the bank, and you're going to be able to save enough for a down payment for that next rental property.
Yeah, I mean, we came out with a whole seminar about raising your cash flow just because we know interest rates went up. And people out there, we know right now, if you're not cash flowing, you're not crying. Okay, and what do we mean about that? We've heard that our clients are getting $1,000 per room for student rental properties. So, I mean, it is more management, but if you have the time and you want to make that cash flow, $1,000 per room, that is huge. And if you can't do that, we've got people doing Airbnb. On average, our clients are making $150 a night, or bringing in $150 per night per suite. And if you have an up-down suite, that's $300 per night. And these things, Tim, are rented between 21 and 23 days per month. on average what our investors are getting, and the cash flow is absolutely huge. So there is multiple ways, and what Tim's got in here is just keeping up with market trends. I was just in Australia and they were signing 3-month leases because interest rates were going up. So landlord, there was such a shortage of rental properties down there that the landlords were signing 3-month leases just in case the interest rate got bumped up again. And their rental properties down there, they're not like 400, 300,000 like here. They're like 700, 800,000. So when you get that 0.2 increase, it's absolutely massive. So they were signing three. I mean, we're not saying to go do that here, but that is extreme from what I heard down there. And what Tim was saying in here is keep up to date. Like we kept getting shocked on how basically rental rates were increasing. I mean, someone told us the other day they couldn't find a basement suite in the Northeast for under $1,500, and we were still running our numbers at 12.
Yeah, and so what do you do if you have a rental property and you can't go out and buy another one right now? How do you increase that cash flow? Well, like I was talking about, there's very, very simple ways to do it. First of all, you can rent it out by the room. Student rentals, or just as a rooming house, they all share the kitchen and the bathrooms. You can add a secondary suite, whether it's converting the basement into a suite. We actually specialize in secondary suites. When Azad and I are with clients and we walk into a suite of property, we can tell you right away whether it's a good suite, whether it's a safe suite, whether it's a legal suite, how much it would cost to legalize it. So that's the #1 way to increase your income on a standalone rental property. You can go, like, as I said, Airbnb, you can rent out the garage. If the place has a detached garage, you can rent that out for more income. You can rent out parking spaces. We've got guys renting out, so say they've got a double garage with an RV pad or a parking space besides the garage. They're renting that out to someone who owns an RV for anywhere from $100 to $200 a month, and that's just for a parking spot.
Yeah, we've seen garages be transformed into yoga studios. We've seen it transformed into some guy was a cabinet maker. He was bringing cabinets in one. And when you rent, I mean, you'd have to be wary about the bylaws in your area, but people don't care. I mean, we've seen rents $500 to $700 just for a garage, just by doing that. So you could specialize in something like that. You have to get creative. At the end of the day, you need cash flow, and you need to buy cash flowing properties. We only buy cash flowing properties for our clients, so they can move forward onto the next property. As soon as your property is not cash flowing and you're pulling money out of your back pocket, that's when your days are numbered as an investor. So we always strive to cash flow on every single investment we buy our clients.
Yeah, and the last line here on the slide is you have to maintain your property. We find this over time that a lot of people that we know a lot of past people that we knew who invested in properties, they were in it just for the cash flow. And those are the type of people that we would call slumlords, where they just go for maximum cash flow. They don't spend a penny on the property. And over time, the value of the properties and the property's condition starts to degrade. So what that does is it lowers your rental rate, because over time, people won't be paying that premium rental rate because the property will become run down. And as I always say, if we want to introduce another cliche, and cliche night, is rundown properties attract rundown tenants.
Exactly. We say it all the time. And you want to look after your properties. You want to have pride of ownership. You want to be those good landlords. I put something on Facebook yesterday that there's some site that tenants can complain about the landlords, and good for them. I mean, you should provide. I mean, we've got a pastor that is one of our crew investors that provides affordable, safe housing for people out there, and you should be proud of that.
Yes, and again, with maintaining the properties, we were just helping one of our older clients. She was getting out of the rental business. She's getting older. She's just wants to retire. We helped her sell a couple of rental properties, and what we found is she had owned one of them since 1996. But we went into the property to appraise it for her, and it was in immaculate condition. It was a fourplex in West Hillhurst, and it was in great condition. She had maintained it over all those years, like it was over 25 years that she had maintained it. and her other property was a condo, and that was immaculate as well. So maintaining those properties means when you eventually get out of this game, in 25 years, 30 years, you're going to get a premium price when you go to sell it.
She got top dollar. So, you know, and she could time the market. I mean, the market is incredible right now. And she's like, you know what, I'm getting tired of this investment game. She's been with us for 20 years, I think. And she's retired and she was doing Airbnb and she's just done. She's happy to fold it in, put her cash in the bank and retire.
Yeah. So that's why it's important to maintain the thing, especially with multiple properties, because you want to maintain that asset like any other asset. You want it to hold its value. You don't want it to decrease in value over time. Okay, moving on to the next one. You can create instant equity. So you could, with each purchase, so you can buy over and over again.
So this is key to everybody out there, to everyone that wants to know, how do investors keep buying more properties? This is the main reason. I mean, we have some other ways to do it without qualifying for a mortgage, which is a little different, but, and we'll get into that. But we're always telling people leverage is the velocity of money. And what we mean about that is you can use leverage right now. Tim, who knew the condo market was going to go up 10, 20% this year? Who knew that, right? So all those people in the condo market already, if you know, 300, they made $60,000 to $80,000 in a short span of time. We're talking, Tim, 8 months, right? 8 months ago, that same condo was, well, you bought it for 190 and today it's worth 270. So they're the exact numbers. I mean, we kind of expected it because a lot of factors with inflation, interest rate, affordability, no houses to buy, rental rates going up, all those things trigger that. But everybody has to remember that this magic thing happens in real estate investment. We're not going to be the ones to say this is going to happen, you're going to make so much money, but Calgary is trending upwards. And if I was to get into the lower price points in Calgary right now, it's going to make money across the board. Do we have problems in some of the areas like Forest Lawn or parts of different little pockets in different communities? Yes. Is that going to change? In some of those communities, no. You know,
but in others it will change. We're in communities right now putting people in suite properties that we would have never touched 10, 15 years ago.
Yeah, there was no need to go there. But guess what? Now those pockets that Tim's talking about, new infrastructure is going in, those homes are more affordable. The numbers work when we rent them out. And if you can get good quality properties on good streets, then you know what? Then you're going to hit a home run. We can tell you that we put an offer in last week on a property on a $600,000 home, the one in Winston Heights.
Yeah,
600.
yeah.
$600,000 home that this half duplex was built. It was built 5 years ago, 7 years ago. The builder didn't sell it. It was started building in 2014. We had that economic thing go on in Calgary with oil in 2014. Couldn't sell it, held it as a rental. Now it's come up for sale. And it's in Winston Heights. It's on Centre A Street, which we will tell you out there, it's a questionable street.
Yeah, and 10 years ago it was a very questionable street. All the houses were 70, 80 years old. It was all low income housing, very rundown. But now, over the past 7, 8 years, builders have gone in there, started knocking these down and putting up new houses.
Yeah, and so why would we allow a client to buy a house like this to live in? It's because he understands the investment game. He also understands that every comparable property in communities around him, we're talking just blocks away, are selling upwards of 800,000. So all we need is already happening on that street, that they're knocking down houses, building new infills. We already know that we've done research that property will go up. We don't know how much by, but it will continue.
Yeah, so instant equity, could you do that in every single market? No, but Calgary tends to boom and bust quite a bit. We're resource-based. We have a resource-based economy. So getting instant equity when the market is on its way up, it's very, very easy to do. You just have to choose the right property in the right area. And what we've found is with the market that we're in right now, if you're willing to maybe go a little bit outside your comfort zone in the types of property that you want, because right now, every single person that we know wants a suite bungalow. Between 400 and 550.
Yeah.
They're just not, there's just none on the market right now. So if you're willing to get outside of that, look at some other options. You can create instant equity.
Yeah, I mean, and how else can you create equity? You can add value by adding a suite. You can do renovations. And you can look at the spread in a community, like what is unrenovated property, like in Parkland, we're just telling you guys about, coming on the market for. It's coming on for 700. So if we were going to dump him $150,000 into it to renovate it, well, we would need that property for it to make sense for us to be worth about $1 million bucks.
Yeah.
Million plus for it to make sense. So where can you see Parkland trending? I mean, it's already happening. We're seeing these communities that are selling $1 million bungalows. It's just crazy. So you can add value, but the whole key to people buying multiple properties is those bunch of factors that we just went over, raising the capital. And if you're good at that, cash will always come in. And if you're not good at that, you have to create equity with the property you have and then release that equity. So you refinance that money, and you have to remember it's tax free. Okay, so Graham just making $80,000 to pull out of property number 3, and allowing him to put 20% down on property number 4, the banks will let him do that because now he's putting 20% down. And guess what? It would have taken him to save $80,000 in I don't even know how long, right? And all it took us getting that $80,000 was to buy into a property, sit on it, wait for the market. It only took him 6 months, and now he's got his next property. So, if there's a will, there's a way. We'll leave it at that.
Yeah. So also learning how to access that equity. The last line on this slide here. The best way to do that is to figure out the value of the property and see how much your equity has gone up from when you bought it till today. So if you have properties that you've held for a little longer than 3 months,
You're a house.
yeah, and you want to know if you can access equity in it, well, either talk to an appraiser, professional appraiser. You can spend a lot of money on them, and they'll go out and evaluate your house, or talk to Azad and myself. We'll be able to tell you what the value of that house is roughly, plus or minus 5% right now.
Yeah, and you can finance 80% of that. So some people are sitting on equity, and we're going to get into the multiple strategies in a little bit here. But in the beginning, if you're just getting into investing and you want to buy more than 3 properties, you have to use that equity that's just idling in that property to buy multiple properties. And Tim and I have done that to buy more real estate for ourselves and for investment properties in the past. So that is key to actually moving forward with buying more.
How do you get properties without qualifying for a mortgage? There's a number of strategies out there. We'll talk about these right now. We've been talking about already is JV partners. So you can use a JV partner to acquire a property, and you can retain a percentage ownership in that property. Now, that JV partner will have to qualify for a mortgage, so you have to find a select person that can do that. But as long as you jointly own it, that's another piece of real estate that you can own. So that's how you get another piece of property without qualifying for a mortgage in that situation. As I was talking about, paying the person a return for a down payment or something like that. That way you're qualifying for the mortgage, but if you can't qualify, the JV partner can be the qualifying partner.
Yeah, I mean, in the early days, Tim and I bought most of our properties through joint ventures. And why do we do that? Because you come to the point where the banks they check your pulse when you tell them how many properties you own, just because they've tightened the rules up so much to buy, and they've capped it. Some banks have capped it. So you need to find JV partners that are interested. And we want to stress this to you guys. We're here to help with that process. We've helped father and sons, we've helped mother and daughter, we've helped 2 nurses, we've helped just all different sorts of people on softball teams, friends, joint venture and buy together. So never give up on that, because real estate is such a solid vehicle to create wealth. And the best thing about it, we make it easy for you. We're taking the speculation out. we're actually too cautious. We see people buying investment properties with other people, and we're like, that is just absolutely crazy. We got offered a property in Forest Lawn off market tonight that could be a good deal, but we won't do it for 98% of our investors because we know Forest Lawn has a lot of these problems there. That's not going to change for a long, long time.
Yeah, this property, it's one block of 17th. It's right in the middle of, a bunch of bars. The guy said it was a very, very nice property. It may well be because they've prepared it for sale, but we're not going to put a novice investor in that, a block of 17th and Forest Lawn, their first rental property, and not knowing what type of tenants they're going to attract. So, just because you're offered something from a potential JV partner doesn't mean you have to take it. You still have to go through all the analysis that we were talking about earlier on, but just listening to that presentation of being offered, to JV on something, the next one from that person may be a really, really good property.
Yeah. So you really got to work out where you're buying and have the right team that actually helps you make the right decisions. And that's what it comes down to. A lot of investors give up because they buy the wrong property, right? And it could deal with supply issues or in the wrong area, or it's run down. It could be or the neighbors could be nightmares from hell. There could be a multiple reasons why that property is not going to work. And we're there to point that out every step of the way. Okay, next one is VTBs. This is becoming more and more popular. And we love this because normally when an investor sells, they have to pay capital gains on their appreciation. And we've got our investors going out there doing VTBs where they're attracting people selling their homes either on their own or they sell them, like on Facebook Marketplace, or I don't know where you see these listings, but they come across these deals where, and you see the signs out there, we buy houses and stuff like that. We've got investors actually doing this and they're killing it. And the reason why it's so successful is because when you can explain to a seller that if they're selling a property on the MLS and it sells for 400,000 and there's no mortgage on there, well, they have to pay capital gains on that. But if they agree to do a vendor take back, normally what happens is that there's an initial deposit. It could be 20K, it could be 10K, it could be 40K, and there's an agreed price, and the rest of the amount is a vendor take back loan. Okay, so now the seller becomes the bank, basically, and all of this is drawn up at the lawyers. So we've done a whole seminar on VTBs and it's fascinating. Yeah,
it's all over the board. We would strongly recommend using a lawyer to put this together as opposed to downloading something off of the internet and saying, here's my VTB contract.
Yeah, so VTBs are great because then the seller now only pays tax on their monthly income, which is a repayment, Tim, of the loan. So they're only paying tax on a portion. And if someone's elderly, like we've all heard about these old Greek guys that own 30, 40 houses out there, they love this sort of stuff because now they're generating positive cash flow for their future needs.
Yeah, they do 3-4 of those things. That's income for them. So they're retired, they don't work at whatever job they're working at, but these VTB loans are bringing in monthly income from 1, 2, 3, 4 properties. So they're happy with that. They can go into their retirement years with a steady source of income.
Yeah, so that's on VTBs. Agreement for sale is very, very exciting and it's very doable right now because interest rates have gone up, right? But interest rates during COVID were down. It was hard to do because everyone's payments came down. So what's happening, Tim was just telling me that a lot of renewals are coming up in the next 3-4 months.
Yeah, everybody who got a mortgage at a very, very low mortgage rate, you could get a variable rate for, under 1%, even a fixed rate around 1%. Well, those were written 3 years ago. So anybody on a 3-year term is going to come up for renewal. Next year, anybody on a 4-year term is going to come up for renewal. And year after, if anyone on a 5-year term, which most people have for renewal. When these people renew their mortgages, their payments are going to double or triple
through the roof. Like they're going to go from say 2% mortgage to 5.5%.
Yeah.
They're going to be panicking. The cost of living for them, they're going to either have the downsides, and you could give them this opportunity. What an agreement for sale is approaching a homeowner to take over their current mortgage. Okay, the problem is not the problem, but in some price ranges, there wouldn't be a problem, especially over the $500,000 range. whatever the mortgage is, you will owe them the difference on what the property's worth and what the mortgage is. So if they have, say, a $500,000 mortgage and the property's worth $525,000, you will owe them $25,000. And what you want to do is run your numbers to make sure you can rent out the property. There's multiple ways to rent it out. As we said before, you can do student rentals, you can do Airbnb, you can do a furnished rental, executive furnished rental, depending on the property, just to increase the rent to cover all the costs. And then at the end of the term of the mortgage, that's when it's your responsibility to refinance and put your own mortgage on that property. And at that time, if you're buying in the right area, that property now might not be worth $525 and maybe worth $625. So there's enough equity in the deal to pay out that first mortgage and put your own on it, costing you very, very little money and not having you to qualify straight up front. So there is massive advantages of agreements for sale. I know our clients are using a lawyer that's up in Edmonton to get these deals done. It just takes some creative work. And but that is going to become more and more popular in moving into the next 3 years.
If people can't pay those monthly payments because their mortgage payment has gone through the roof, and if they can't sell those properties, then they're going to be looking for alternatives. And if you offer them an alternative that keeps them whole, they don't go into foreclosure, you'll have lots and lots of potential to go out there and get more properties.
Yeah, and what we've also seen, you have the ability to sell the property at any time. So if before the 3 years the property's gone up, we've even seen investors go in and renovate these properties and then add value and then sell it for more and then pay out everything without, so it's very, very creative. And it's our members that are really into investing that are doing that sort of stuff. And Tim, as you said, your first slide, it takes work.
Yeah.
Like that takes work going to find something. And it moves us on to lease options. Lease options, Tim and I have been involved in over 100 lease options to date. And lease options are very, very creative because you're actually leasing a property with the option to purchase it, okay? So a bit different from agreements for sale where you're agreeing to put a new mortgage in place or sell the property at the end of the term or during the term. Lease option, you have the ability to have the option to walk away from the property. Yeah. And that's what I love about lease options. I mean, we would only do a term with 3 years minimum in this market and up to 5. We've done as long as 5 years. But what you're doing is you're going to own landlords out there and you're asking them to rent the property off them, but have the ability to buy the property off them at the end of the lease, okay? And what's cool about lease options is you can flip that same idea into a rent to own, which is even getting more confusing, Tim, because now you can rent it to a tenant, okay, that is on a rent to own that gives you a big deposit up front because maybe they can't qualify now. That we've seen rent to own can go all up to $20,000 deposit. Yeah. So you get a $20,000 deposit, and if the rent is $2,400 a month, normally on a rent to own you're collecting $500 more each month as a rent credit that goes towards their deposit when they go to buy the property. So that can increase your cash flow position massively, okay? You're getting a 20 grand deposit up front, you're getting $500 extra a week on your rental property that's above and beyond all costs. And then if they buy the property off you, they have a predetermined price, okay, of what you're paying, and that could be more than what your lease option amount is to start off.
Yeah, so how do you turn this around and make this a strategy so that you have more properties? Well, go out and get 5 of these. You go out, you talk to 100 landlords, and if you get 5 that bite and they'll do a lease option with you, and the term of those lease options is 4 or 5 years, we generally try to do for a cycle. You may not close on all 5 of these properties at the end of that cycle, but the cash flow and the initial deposits that you're getting from those things over those 5 years, you can, make enough of a down payment that you can go out and buy your own standalone rental property. If you have to clean up your credit over those 5 years, you can do that. If you have to get another job where you make a little bit more income, so the banks look at you more favorably, so you can get your own mortgage. You use these strategies to increase your income and boost your savings so that when you do go want to buy your own rental property that you own 100% by yourself, you use all that income to do it down the road. So, you know, you use these strategies to help you buy those other properties down the road if you can't do it right now.
Yeah. And Blaine's just asking, where do you find these people? Agreements for sale, you have to talk to homeowners. That's going to be more like we buy houses, or don't use a realtor, don't tell anyone, but don't use a realtor. That's how we make our money. But that's more agreements for sale. You need to get out there and put flyers out. That's the only way. Or there are groups, Tim, that do Facebook ads out there, and they put it out there to homeowners that maybe are like in trouble financially, right?
Yeah, and I'm sure all of us have looked in the mailbox and seen these little flyers, these little, you know, cardboard flyers that say, you know, we'll buy your house. And what they're looking at is they're looking for people that are in a distressed position with their mortgage, that they can help these people out through a lease or agreement for sale or a lease option and maintain their mortgage payments so that that person doesn't have to, you know, take a lot if they sell before the end of their term or foreclose. So that's how you do it. You do your own creative advertising, whether it's door knocking, seen that in the past, you know, it's flyer stickers on light posts, we've seen that.
Oh yeah, when you're driving, you see them there. And lease options, you'd be going on Rent Faster, asking people to come see the property, and then asking them to sublet it and have the ability to buy it after the fact. And people are doing this with Airbnb arbitrage right now, where they're doing the same thing, finding landlords that will allow you to sublet their property as an Airbnb. And it's in their best interest. You can guarantee them the rent because the Airbnb sublet far outweighs what you're paying them if you run the numbers on the right property. And you're checking in on their asset to make sure that it's in good standing order weekly, or if not bi-weekly, right? Because Airbnb, there's standards that you have to maintain. And so those properties are looked after. And if they get guaranteed rent, and no property management fees, I mean, they're saving a fortune just there, Tim, on all those three things. So there's different ways to do it. And JV partners, getting back to buying multiple investment properties, if people are looking to get into apartment buildings like we were last year in Edmonton, or was that the year before, 2 years ago? It comes down to syndications. So doing syndications, getting a group of like-minded people. You just have to remember in a syndication, someone is, what are you saying, Tim, when you go to the bank and they put a lien, someone's putting a lien on your property. So you just have to be prepared for that to understand what your worst case. And it's like any business that you get into, the bank will lend you the money, but they want some collateral, right, behind those funds. So you have to work with the right team to be able to pull that off.
Yeah. So the next thing, and probably the final thing, is to get multiple properties, is start doing multiple real estate investment strategies at the same time. You could be out there, you can buy 1/2 of a duplex on your own because that's all you can afford, and you can do an agreement for sale on the other half. So over the term of that agreement or after the term of that agreement for sale, say 5 years, your ability to qualify for another mortgage comes up, and then you buy that other half of the duplex. You sweep both of the duplexes, and then you've got 4 units. So if you're doing a lot of different strategies at the same time, you have the ability to increase your holdings quickly.
Yeah, and what we do see, Tim, is people upgrading their portfolios. So they might own a duplex, and then as you got here, they go to a fourplex. So they upgrade their holdings. And we've said it before, Tim and I used to own properties all over. I know I had a bunch in the Northeast. I live on the west side of the city, and I no longer own over there just because simply, Tim, although I wish I did own some over there, it's gone up 100K over there this year. We always say that happens in the Northeast.
But it went up 100K.
Yeah, so I took all my money out and went and bought in other areas. So it's a catch-22, but I don't live over that way, so it's easier for me to own elsewhere. But upgrading that portfolio, getting more doors, buying into the right properties. And you have to remember, we'll be the first ones to tell you this. Tim taught me this earlier on in the business when I was going crazy buying whatever. It's like I was buying. And Tim said, you know what? It's not about how many doors we have. It's about the quality and how much equity you have in it.
Yeah, because your management work, if you have 10 properties and each of those properties, you've put 5% down, you own 5% in each of those 10 properties. Well, what if you owned 50% of half of those properties? So, it's half the management, half the strengths, but you still have the same amount of equity. And it all depends on, I guess, your drive. Do you want to manage those 10 properties? Do you want to have a property manager manage those 10 properties? It all comes down to how many properties you want to own and how quickly you want to get there.
Yeah.
One strategy that we should talk about a little bit is how to move ahead really, really quickly is our move up program.
Yeah.
Now, this works for people who don't own anything at all right now, and it also works for people who are in their first or their second property right now.
Yeah.
So how our move up program works is you buy a inexpensive property to start off, whether it's a condo, whether it's a townhouse, a small starter home. A lot of our younger clients do this because that's what they can afford. But like as I said, some people will come to us, they've been renting, but they can qualify for an $800,000 home. We'll say, well, wait a minute. If you do qualify for that home and you buy that home, there's all your qualifying ability. You can't tap into your credit to buy another one for quite a long period of time.
Yeah, you know what, that is key, Tim. Move up program is delaying gratification and it will get you there faster. It's been proven. There's a couple of guys on the call tonight. I can see them, Cole and Connor. I mean, they're already on their second properties. They've both made, the first one's made 100 G's off the first two properties. Cole, I don't know if I told you, but there was a bonus property that came on the market in your community. We bought him a rundown property in the bonus. We bought him there for a reason. The community's doing a turnaround. New superstore is there, new, what do you call that market? Market. COP is building a whole new complex over there. Anyway, that property we bought for Cole, I think for $393 or something, $390 or $387,500. Him and his cousin took out a fourplex. Good for these guys, smart guys. And you know what? One just came on the market just the other day for $490,000, exact same specs as his, unrenovated. So that property now that he bought, Tim, it was only 6 months ago. That one now has almost gone up 100,000. So by making those smart decisions, running the numbers, working with the right team, it's all about making you guys the money, at the end of the day. And that's how we get our business. Because Cole told his cousin to buy the other side. His cousin, I think, was renting or living with his parents, Brett. And guess what? Now he's made 100,000. So that is just absolutely crazy. If you have any questions, put it in the chat now. We'll get to them quickly, and then we'll just go and tell you guys a lot. Deb here, and we love this, okay? Because we see a lot of this nonsense over the years. Give up your day job. Or become a real estate
or you can quit your job and then we live off your cash flow in 6 months.
Yeah, that is crazy. That is nonsense. Okay. You need a lot of cash flow to replace that. The only way you're going to replace your income, and it is possible because we do have clients doing it. We actually have a lot of people retired and that are living off there. But the only way to do this is to buy the right properties, right? That you refinance and take that money every year. So I stagger my properties that if there's 100,000 in that one, 200,000 in that one, you can access the capital when you need to, tax-free, and live off that income. I mean, I don't live off it. I owe the CRA right now some money. So that's where all the money's going. But anyway, that's another story. We'll talk to Justin Trudeau about that one. But the whole key is doing what you love. Life is too short. Tim and I, we can tell you, I was a chef, which was a grind. Tim was
in retail.
He was in retail, which is a grind. We both have big families. And you know what? We wanted to spend more time with our families. We wanted to go on more holidays. We wanted to be there for the sporting events. And so do what you love, work in a job. We became realtors, right?
Yeah.
And we also love what we do. And our main aim for any of our clients or our mission is to make you money. It's as simple as that. It's not for us to get rich off the material we're giving away for free. We're giving this away for free every second week. And you know what? You can learn from it. You can take action, and we'll get into that shortly.
Yeah. So Again, don't quit your day job. This real estate investment thing is not going to make you a millionaire today. It takes a long time for you to get there. Can you get there quicker? Yeah, we've mentioned a lot of strategies that you can get there quicker, but it takes a lot of work. And it does take some cash, whether it's someone else's cash that you're going to use or your own cash. So there are certain things that you have to, or fundamentals that you have to follow in order to get ahead with this real estate investment game. How do we know which one to avoid? Because we've failed a lot. We made a lot of mistakes over the last 20 years. So we teach our clients to avoid those mistakes so they don't have to repeat them.
Yeah, and that's the biggest thing. We've lost a lot of money in the game. And so now you get to reap the rewards and avoid those mistakes, Tim. I mean, we've gone through hell before. We've had to go through the bad stuff that you read about. But guess what? Since we've designed what we're doing, none of our clients have any problems at all with tenants. And if they have had problems, we step in to look after it. So having the right team is crucial in investing in real estate.
Okay, so that's our seminar for tonight. We're going to just move on and talk about a couple of books that we've written. The first one is 1 Million Reasons to Buy Real Estate. It's a free ebook. You can download it anytime. Just go to our website, you can download it. And it tells you the core fundamentals of why we get into and why we love investing in real estate. There's an analysis in there that tells you how you can make money over time with real estate. It's a really quick read, but it's very, very informative.
Yeah, as Tim said, it goes through the core fundamentals. It's free. Download it. It goes straight to your inbox. It's a fun read. Get it today.
The next one is Fearless Real Estate. That's holding it up. This book is full of client stories, full of interviews about what our clients have done, all the different strategies that they've done over the years. And it's real life stories of real life clients. Their pictures are on the front of that book because it is about them. We wanted to write it about them, not about us. We do talk about a few things that we've done over the last 25 years, but it's essentially about how they've had success in the real estate market and how you can have it too if you just do some of the same strategies.
Yeah, the link for the books in the YouTube channel, you can go to our website. We've kind of relaunched our website to Calgary Real Estate Investing. Through Doug from Calgary Real Estate Wealth. We've kind of branched out because we've had a lot of people down south buying our program. So we're just trying to help people across the board with that. The next thing is we need to stress this. We do not put this on anybody, okay? We will give you all the support you need to buy your next property to get you started. But if you want to fast track that, we've designed this program where it's only $97 per month. And you get everything. When I say everything, there's over 100 hours of content in there. You can find this course on our website as well. But it's designed to create $1 million worth of equity and buy you a minimum of 3 properties doing this course. So we need to stress that. It's not for people that don't want to do it. And do we have people that are a little stuck? We had one guy that just lost a job, Tim, the other day. We've got another guy that we got lots of people that aren't in position to get the financing right now. So we had to work out different strategies for them, like Airbnb sublets, or those things we talked about, agreements for sale, rent to own, lease options, all these other things. And sometimes we have to get people raising capital through family and friends, and we have to have meetings with their family and friends or whoever it is to move them forward. We're here to make it a success. We only want people that really want to succeed at this. That's what makes it worthwhile. And we're not going to give up until they do succeed. But if you want to see some great success stories and see if it's for you, we created this Crew TV. We love it right now just because people are watching it all over the country. And you know what? The reason why they're watching it is it's real, right?
It's real clients who did real strategies in real estate investing.
Yeah.
It's not, there's nothing fictional about it. It's these people, it's not edited or anything like that. They're just telling their stories of what they've done and the successes they've had.
Yeah, and it's great for us because then we're not selling ourselves. We're just showing you what we're doing for our clients. And there's a couple of guys on the call tonight that we will be getting in touch when you're ready to have some more interviews as well. So there's some new content on the Crew TV. Okay, if you think investing's for you, you simply reach out to us. We do these free seminars every second Tuesday. We encourage everybody out there to go to work tomorrow, tell everybody about it. We've got 5,500 members or something like that. We want to get to 6,000 by the end of the year. We think it's doable. And if you think investing's for you, just simply send us an email. We'll be happy to set up a Zoom in-person meeting. We don't really go out for coffees anymore because we're so busy, but we will meet with you in our office or a Zoom and help you make the right decision.
Yeah, so if you're interested, just give us an email or give us a call or a text. We'll be happy to help you out. And thanks for joining us this Tuesday. I know it's really nice weather outside, at least here in Alberta. And it will be for the next couple of days. So enjoy it.
Yes, enjoy the weather, enjoy the playoff hockey.